Okay, everybody, thank you so much for joining us on this video interview today. We have a very special guest, Joe Jacobs, here from his home office. Unfortunately, one of his kids is sick, so he's not working with the rest of the brokers today. But just a little bit about Joe before we jump into this interview. 20 years experience. I know it probably looks hard to believe because he's not even 40, but basically been doing this his whole adult life. He is a co-owner of Mortgage Connection, which if you're unfamiliar with Mortgage Connection, they have just a massive team of amazing mortgage brokers. Anybody that I've ever worked with from Mortgage Connection has done a phenomenal job. Joe personally has helped a number of my clients over the years that I've known him, and always just true professionals. And Mortgage Connection and CIR Realty, the brokerage that I'm with, are actually have a partnership. So we have mortgage advisors in all of our offices, and they're just really, really great people. So Joe, thank you so much for joining us today.
Oh, well, thank you. Thanks for having me, Jared. Appreciate it.
Yeah, you bet. So one of the things that everybody wants to know, I'm getting calls, texts, and emails like crazy from my entire database, is interest rates. People are freaking out. I'm sure you're getting even more than we are. So we just wanted to have a quick chat with you on what's going on right now. Like, what is going on with the Bank of Canada? Why are the rates raising so fast? What are some things that we can expect to see? Just bring us up to speed on your world and what you're seeing.
Sure. I mean, we're certainly not in a normal circumstance with the Bank of Canada and what they're doing. So I think trying to understand it a little bit could maybe help you and your clients on kind of what's actually happening. So what it is the Bank of Canada, they have a mandate to try to battle inflation. If you've been living under a rock, maybe you're not aware of what inflation's doing, but everything's costing a lot more money. So inflation's at basically 40-year highs right now. Okay. Why that's happened is, I mean, frankly, not just the Bank of Canada, but every central bank was printing money during the pandemic, spending like crazy, and the economy was actually not as bad as people thought it would be as a whole. So certain segments were really hit hard, restaurants, certain businesses, but other businesses like home building, real estate, they all went to new highs. So you had tons of inflationary pressures happening. It probably drew on a little too long where they had money at artificially low rates. And what they're doing now is playing massive catch up. So the only leverage that the Bank of Canada has, the only lever that they can pull, is raising rates to try to slow down the economy, bring inflation in check. Why they're doing it so aggressively, again, is they're a little late to the party, probably a year late at least. They also have a government in Canada that's still spending. So they kind of have polar opposite policies happening right now. So it's a really tough battle. We're probably not going to see the Bank of Canada stop anytime soon, though. The reality is the inflation's down somewhat, but there's still more room to come before they're at anywhere near their target level they want. So latest reports, inflation is kind of around 7.5%. They want inflation at like 2%. So they're nowhere close to it. Wow. But there does get to a point where you can't just keep increasing rates without there being impact. Eventually, people are going to stop spending money. It's going to have the risk of driving the economy into a recession. We're already seeing that in certain areas. And if that happens, they now go, what's more important for us? Inflation or that we don't have any growth? So often what goes up will come back down. We've seen similar things to this happen in history, not to this extent maybe, but we probably see a bit of a more run of the Bank of Canada raising rates this year. That's at least been their message. Hopefully at that point, they take a wait and see approach to see if we actually see the economy start to slow. And then we could see some settling. So it's crazy to see rates jump at the levels they've jumped when the Bank of Canada is making movement, but it all has to do with them trying to get inflation in check.
Fair enough. Fair enough. So, and it's impossible to predict, but you don't see it coming down anytime soon. Like when you say leveling off or settling, that means just letting it sit.
So trying to predict rates, kind of a hopeless thing. But what I will say is the rates that we were at were completely artificial. So you're not going to see those kind of low rates happen again. Yeah. But often central banks will miss on any kind of monetary policy because they're basing moves on past data and try and predict the future. And they often just overshoot. So you could see, rates go up another percent and then come back down 1%, 1.5%, 2%. Like that wouldn't be crazy for that to happen. Do I think you're going to see them drop rates back down to 1%? That's probably not happening anytime soon. But when I say settle, it could come down a little bit from where it's at now or where it maxes out.
Oh yeah, when the rates were that low, we were telling all of our clients, buy anything you can right now because you got 5 years of basically free money. So it was just like a gift came out of nowhere. So fair enough. No, those are great answers. Thanks for helping us with that. So how do mortgage rates directly impact buyers, and how would a 1% increase, like we just saw 75 basis points a week ago, how does something like that affect, your average buyer in today's market?
So there's kind of two things to keep in mind. One, it actually impacts your borrowing power. So everyone's probably heard the term the stress test. The stress test is changing as these rates are moving. So in general, stress tests are priced based on 2% above whatever a contract rate is. So if rates are going up, that stress test is going up. So that is directly impacting your buying power. So to give you an example, last week, well, let's just say it's 1% higher. So a week ago, just for simple math, a week ago, if you made 80,000 a year, you'd qualify for about a 365 mortgage, just simple math. Okay. You're now down to 330 because of this rate increase, or a rate increase of 1% would get you there. So it's basically got a 10% direct buying power impact. So that's pretty significant. The other thing that I think is really important to realize, though, is it's not just necessarily what can I afford according to the mortgage broker or the bank, but how does it actually impact my payment? So the other side of it is obviously payments are going up. And some of I would say it's not misguided, but often people think, well, maybe I don't mind rates going up because that could drive house pricing down and I'll just get a cheaper house. And that's maybe true. We are seeing that in some markets, but houses dropping 10% doesn't have a major impact on your payment.
Right.
So if rates have gone up 1% and your house goes down, 10%, you're not really paying anything less for your house. Right. You're paying less as a purchase price, but when you take a look at what your mortgage payment is going to be and the interest you're paying, it's a pretty similar level. So it's impacting two things. You qualify for less and your payments are higher. So it's not good news in that way.
Yeah, I saw a realtor from Toronto just posted on Instagram the other day that just exactly what you're saying, that in April you were paying 1.2 for a house. Now you're paying 900,000, but your payments are still the same. I mean, I would argue that buying a house for $300,000 less and waiting for the rates to drop is still a win. But I mean, these buyers that are sitting on the sidelines waiting to get into the market until the rates drop, it's not doing much for them at all.
Yeah, I think it's just important to show that the correlation is not meaning that you're going to necessarily have less housing costs. That's all. I mean, obviously, if you can time it perfectly and hit rates coming back down and the market's down a bit, well, I think that's great for you. But
I want to find those people and learn what they're doing if they can predict it, because I've always been told to buy and wait, not wait to buy. So fair enough. Now, this next question you've answered for me personally about a half a dozen times in the last 3 months because you've done a few mortgages for me. But I think it's really important because a lot of people don't really understand this. So explain really quickly, if you don't mind, what's the difference between a variable and a fixed rate, and what does that mean, and what makes the most sense right now? What are we seeing with the two different types of mortgages?
Sure. So there's actually kind of three different types, and it's really important to make the distinction because when it comes to variable and adjustable rate mortgages, because there's differences between them. So the first is fixed rate mortgage, pretty straightforward. You're going to have an interest rate. It's going to be set for a term, let's just say 5 years, and you're going to have a fixed payment based on that rate. Nothing will change. Simple. For a variable rate mortgage or an adjustable rate mortgage, you're still going to have a set term, say 5 years. You're going to have a discount off the prime rate, and that discount's going to be set for that term. But your rate itself would fluctuate if prime were to go up or down. Right now, it's going up. But where I say there's a distinction between adjustable rate mortgages and variable rate mortgages, adjustable rate mortgages, your payment will actually move to stay on the same amortization. So if rates go up, your payment will go up, and you're just going to see an increase because rates have gone up. In a variable rate mortgage, your payment will actually stay the same, but the percentage that goes to principal will adjust compared to the percentage that goes to interest. What's really interesting in this market is because rates have moved so quickly, so fast, you're hearing what's called a trigger rate happen. So all of these variable rate mortgage lenders have what's called a trigger rate. So if you get to a point where you're no longer actually paying your mortgage off at all, they will either require that you make a lump sum payment or increase your payments. So a lot of people don't realize, if they haven't talked to a professional, if they don't have someone looking out for them, that they're in a variable rate. They've been in there for 2 years. They haven't even seen any payments happen. And the next month they're going to get a notice from the bank saying, oh, actually, you haven't paid your mortgage off at all. And you need to do this higher payment. So for most people, an adjustable rate mortgage is a safer way to go. So you're not understanding that your rate's actually going up and that you're not paying your mortgage off as well. In some circumstances, variable rate may make sense for people, but they better understand what they're in and understand, if rates are going up, that you're not paying your mortgage off the way you thought you were. Right. You might want to increase your payments anyway, just to stay on top of it. For buyers right now, it's a mixed bag. A lot of experienced buyers that have always been variable are still on that bandwagon that I'm going variable all the way or adjustable all the way. And there's still a case to be made on that. If you're a believer that rates, we're near a high part of a cycle, locking in right now could have some consequences, because if rates drop, it'll be very expensive to get out of a fixed rate mortgage 2 years from now. Whereas an adjustable or variable rate always has the most flexibility. For those that are really worried about actual monthly costs, though, I never want to say that you have to go variable or you should go adjustable. It's different for every person. A first-time buyer, someone that's really budget worried, there's nothing wrong in going fixed. The other thing to keep in mind, you don't have to do 5 years. So often people say, oh, I fixed 5 years, that's what I want to do. Well, we are seeing a lot more people take 2 and 3 year fixed terms right now. They want some security, but they're also concerned this might be a high point. So I don't know if I want to lock in for 5 years right now.
Yeah, fair. I didn't even know that, actually. So thanks for saying that, because I thought 5 years was the only option that you had.
Yeah, so, it's definitely the most common, like 5 year fixed and 5 year variable, but there are shorter fixed terms that can be an option as well.
That's amazing. So you might have just answered this question with your last question, I think, but are there opportunities for banks to offer lower mortgage rates? Like, so say if the standard is set at 5.99, the banks are going to actually give like a deal, like promotion or whatever, they give you 3 or 4%. Are you seeing any of that stuff at all?
So, mortgage rates are kind of like gas prices at the pump. So if one's going up, they're all going up. If one comes down, they'll all come down.
Okay.
They're all fairly competitive. You will see, depending on who you're dealing with, like you'll see some lenders have a posted rate and then they're going to offer you a big discount off that, but that's kind of a bunch of BS, because there's already a lower rate there. There are some lenders that will have promotions or a set of funds that are available in certain terms. So they just might have cheaper money on, say, a 4-year fixed or something like that. But you're not going to see a lender that's priced 1% cheaper than market. That just doesn't exist anymore.
Okay.
But if you're dealing with like a mortgage broker, a mortgage connection, they're always dealing with fully discounted prices from the lender. So the idea is, make sure you're dealing with someone that is looking out for what you're after, because you could get in a situation where if you're dealing directly with the lender, they're just offering you kind of a higher rate, and there's negotiation room, but that low point, can be pre-negotiated if you're dealing with the right professional already. So.
Right. Which is a perfect segue into my next question. So we always say to people, we get calls, texts, emails from people that are unrepresented all the time. They don't have a realtor and they're trying to do their own work, represent themselves. They think they're saving themselves some commission, which a lot of times people just don't even understand, or they've never been taught that as a buyer, you don't pay commission. It's the seller that pays the commission. But they're trying to do their own work. And then we find that it ends up hurting them in the long run because they don't know how to properly negotiate. They don't know the industry as well as we do, trained professionals. So from your side of the coin, what are some of the benefits to working with a mortgage broker and having someone working, like having a mortgage broker work on the client's behalf, and how do the fees get paid for the brokers?
Sure. Yeah. So there's, a variety of advantages dealing with the mortgage broker over dealing with the lender directly. Similar, I'm always adamant, especially as a buyer in this market, not working with a realtor is a huge mistake. You're going to miss out major opportunities. There's properties you're not even going to know are available. It's a tough market. The good houses are still selling fast, all of that good stuff. So same on our side. The biggest thing is we're not employed by any specific lender. So if you go and walk into, say, an RBC branch and deal with RBC, you may get a really good mortgage option. Maybe they do a great job. Not to say the person working there isn't a wonderful person, but at the end of the day, they're employed by that bank and they're paid to make money for that bank.
Right.
So right away, you're in a bit of a disconnect where the person that's supposed to be helping you, At the end of the day, the person lending you money is their boss or their employer. So for us, we're going to give you access to way more options. So you're not going to be cookie cutter into one lender's program. So we can show you a variety of options, can help you be fully educated on what's out there. There's no perfect mortgage product, but we can give you the good and bad and ugly, and we can take an unbiased approach to it because we're not tied to one. If you don't like option A, here's option B, C, and D. So that's the big thing. You also just have a professional that's handling everything for you. So again, you're dealing with someone who, this is what we do for a living. We don't do anything else about mortgages. We're not opening bank accounts. We're not trying to set you up with a GIC at the same time. So it's a different approach. So making sure that, you're fully educated and out there right now, I think it's really important that you're dealing with someone that's very experienced in this space too. We run a very large team, and I had a call with our team a couple of weeks ago, basically saying, if you haven't been a broker, like a mortgage broker for 15 years, which is a pretty long time to be a mortgage broker, you've never really dealt with an environment like this. You've only dealt with rates that are going down. So, having experience, having lender connections, really understanding the market we're in, it's huge right now because there's a lot of questions on how do I deal with buying a house right now? How do I deal with getting proper financing? What the heck do I choose? Because all I hear about is rates going up. So really making sure you're dealing with a professional is the biggest thing. Choice is a big thing. And you just have someone on your side, because at the end of the day, you don't pay anything for our services. The only time you're ever going to be charged from a mortgage broker is if it's like a weird private deal, commercial financing, there's some extra charges. But if you're just, buying residential real estate, we're paid a commission by the lending institutions for providing them with a qualified buyer. So the banks and lenders, they have sales forces. Some of them don't even have sales forces. They use us, and basically they only pay us if we provide them with a well-qualified borrower. So you don't pay anything to use us as your mortgage provider, and you have all the choice. So I guess mortgage brokering or using a mortgage broker isn't necessarily for everyone, but one of my favorite things that a broker that I used to deal with a long time ago said to me, he's like, it's not for everyone except those that want to save money. So if you want to save money, use a mortgage broker.
I love it. Yeah. I mean, I feel the same way. Our clients don't have to pay us. And that's number one reason why we personally, with our crew, we don't double end any listings. We don't believe in it because I can't confidently do the best job I can for the seller and the buyer at the same time. And it's a similar situation for you guys where you're sort of neutral in a sense where if the client doesn't like the direction you're going or what they're getting from bank A, let's call it, you have other options. You're not stuck to that bank. And I love how you put it there that, the person at the bank, and I got no problem with the people at the bank. I've worked with lovely people there. I have some good contacts at those two, because some people just don't want to work with a broker, which is fine. But really at the end of the day, the person writing that, broker from the financial rep from the bank, the person writing their paycheck is the person that's lending you money. So it is a bit of a conflict there. So, okay, I got one last question, and I didn't include this in the email, so it's going to catch you off guard, but you've been in business a long time, almost 20 years, incredibly successful, highly respected. I look up to you a lot. Can't say enough good things about you and Josh and your whole crew, but what's the one thing that you guys are the most excited about right now, and just business in your lives in general?
Just from a business standpoint, whenever there's chaos, there's great opportunity. So I think it's really, I don't want to say that I love chaos, because chaos is maddening, but it is a great opportunity for you really to hone your skills, really provide value to people. If the market's great, if interest rates are cheap, if everyone's house is going up, it's really easy to just kind of go along and do okay, and no one really cares. But this is where kind of the top shine, where you'll see this in real estate, you'll see this in mortgage brokering. The people that really care, the people that really put in the effort, you're going to really see results. You're going to help a lot of people, you're going to calm a lot of nerves, and you can really stand out. So what's exciting for me, what's exciting for our team, is that we think we have the best in the business. And so, this is our time to shine. So I know a lot of people are panicked and worried, but make sure you have a good team behind you, and you can get through this, and you probably have some great opportunities to do really good things from a real estate standpoint because of it.
That's fantastic. And just so I'm clear, you guys are licensed across the nation, right? You can work with people in any different province, or?
Yeah. So we're Calgary based, we're Alberta based, but we're licensed pretty much coast to coast. We don't do anything in Quebec. It's a different world over there. But you know, we deal a lot with people in BC, Ontario. So we can help if you need something.
Perfect. And the reason I say that is there's going to be some people watching this video within our database or however you find this, whether it's Instagram, YouTube, that aren't in Alberta, but these guys are happy to help if you're in a different province, except for Quebec, apparently. But anywhere throughout Canada, if you have any questions, we're going to be attaching Joe's if it's okay with him, we're going to attach your contact info. You can find him on social media. Mortgage Connection, I think, is their Instagram. But any one of the people at Mortgage Connection would be more than happy to help you. So if you guys have any questions, or if you want, if you're doing a refinance, or if you want to maybe buy a rental property or whatever it is to do with mortgages, these guys are amazing. So feel free to reach out with them anytime. And Joe, thank you so much again for your time. I know I take up a lot of it.
Not at all. Appreciate it.
This has been fun. Looking forward to working with you in the future.
Thank you. Appreciate it. Take care.
Talk to you soon.